and I'll leave it to Elizabeth to introduce the panel. Please smash your hands together and welcome our panel today talking about export funding. Yes!
I think we need to have Warwick open all our events. I've never had anyone start like Jerry Maguire, so really appreciate that start. But thank you for all joining us today to discuss cash flow and the importance of cash flow when considering exporting. As you just heard, I'm Liz Huxley, the General Manager of Working Capital at CommBank, and I'm joined here today with Michael Robertson, who's Managing Director at JL King & Co., a Commonwealth Bank manufacturing customer who supplies quality gourmet food to supermarkets, delis, hotel and other retailers, and Sonia Kammel, CFO and COO of Export Finance Australia, who alongside CommBank helps customers with finance and advice for them to help them export. And last but not least, Nick Fewster, who looks after our trade and working capital business for the CommBank. Now, before we jump in, there's no secret, as Warwick mentioned, that tariffs are front of mind to everyone, and they definitely impact businesses and global trade. We're not going to delve too much into that today. We really want to leave that to the experts. And if you've got any interest in hearing more from our economist team around how they're thinking and feeling about the tariffs, please jump onto our CommBank Research website at commbankresearch.com.au and you can see their views there. So as I just mentioned, the threat of tariffs on global trade does present headwinds, but it also presents opportunity. And what we're going to talk about today is how you set your business up to think about exploring working capital, cash flow and exporting. And what are the challenges and things that we need to consider when exploring and financing exporting? Just so we're on the same page, when I talk about working capital, I'm thinking about cash flow. Simply, can your incomings cover your outgoings? And if there is a gap, then how can you work with organisations like CommBank for strategies and products to help close that gap? But Michael, let's kick off with you. Cash flow is critical for managing businesses' volatility and for providing stability when you're considering expansion. Can you please give us a quick rundown of your business and some of the challenges that you've faced and how you've thought about cash flow?
No worries. Thanks, Liz. And as it was mentioned earlier, I'm sitting up here today with the bank and the government. So I'm the customer, so I'm the one with no money. But thank you. Look, I've been at JL King now for 28 years. My role to leading into business was a little bit probably not conventional. I started as a 22-year-old and I was given an opportunity to take over a business that was already 80 or 90 years old in country Victoria. And so I was back then by the owners, and they wanted to retire and give me the opportunity. So that's how I started. So 3 staff. 28 years later, we're currently sitting at around anywhere from 170 to 180 staff. So it's been a bit of a journey over the time. In 2018, our business brought a greenfield site in Bendigo and started a journey to build a new manufacturing facility. And we brought the land, we started the planning, and 6 years later, January in 2024, we opened the plant. A lot of delays and a lot of challenging times happened between 2018 and 2024, and I don't want to dwindle it or keep talking about the word COVID, but COVID was certainly something that impacted our business during that time. COVID changed. So our business was traditionally produce right through the 1900s, and then in the 2000s we ventured into the manufacturing of produce, fruit and vegetables, and then from there went into a brand of Simply Tasty, where we started making salads and ready meals for the independent supermarkets, and it quickly grew into as of today we distribute into every state right through Australia. The COVID scene, a lot of pop-up ready meal manufacturers, and our business was already had a really good base into the supermarkets, but buyers' habits obviously changed, so there was certainly big growth during that time, and as COVID continued on, we're trying to build a brand new facility. We were seeing massive increases in costs to try and get that facility up and operational. And also what we were finding during that time is our customers, we had a lot of food service clients in our produce industry, and obviously they were closed due to COVID, so their cash was obviously quite tight during that period. But our retail side of our operation was as busy as ever, and really strong growth. So what was happening is that our customers were paying us slower, and our suppliers were really tightening up, and that really forced a shortfall in cash requirements during that time. It was then probably a little bit different, but we got sort of 3/4 of the way through the new build, and we've been working with the CommBank locally through James McLean, our relationship manager there. But they weren't our number one bank at the time, and they come through and seen what we were doing, and we're really lucky. A lot of guys come down all the way from Sydney. A lot of the heads of the Commonwealth Bank come in, had a look at what we're doing, and they wanted to back what we're doing. And one of those products was Stream Working Capital. We started working with that back in around 2021, and we're still using it today. We really found that solution filled the gap at that time, but still allows us today, as we now into the new facility, and we have got a lot of new clients coming on board. We're doing a lot of contract manufacturing. So that facility's been absolutely fantastic as we've been growing through the last 12 months and getting our new plant operational.
Thank you. I'm sure some of the challenges you faced resonated with people in the room, even just thinking about suppliers wanting their money earlier and customers paying you later, and the cash flow gap we talked about, and how Stream, our reimagined invoice finance offering, helped you with that. So thank you for sharing that. So Nick, can you tell us about how you and the team fit into the process that Michael described there?
Yeah, no, thanks, Liz. Nick Fewster, I head up the regional agribusiness, working capital and trade business at CommBank, and I've got a team of specialists around the country that support the relationship bankers. So our primary function is to really get close to businesses to dig into that cash flow and understand the drivers. So payables, inventory, receivables, and really dig into that. So it's not necessarily, sounds a bit cliche from a bank, but it's not necessarily all about selling a product. It's about sort of working with clients to help them understand what is changing in their cash flow and what has changed. So COVID's a perfect example. We saw a lot of that. You weren't on your own in that one. We had a lot of customers really negatively impacted, through shipping. Obviously freight rates went through the roof, steel prices went through the roof. We actually were smart about it, saw this thing coming, approached APRA nice and early and said, we can see this is going to be a problem for our clients. So we're actually extending trade terms beyond our normal max tenors, and had done some other things to, our balance sheet's big enough to help support that sort of business. So we sort of saw that coming. But yeah, our primary function is really to dig into the cash flow drivers of a business and understand that really closely. And as again, we're a specialist unit within the bank. Makes it sound pretty sexy, but it's asset finance, transactional banking, global markets, different parts of the bank sort of come in at different parts of the journey. So yeah, we're privileged to sort of be part of Michael and JL King's journey as well, which has been great.
Thanks, Nick. Michael, is that your reflection of how the team's worked with you to understand and help you with your cash flow need, and then help find a solution like Stream to resolve that problem?
Absolutely, Liz. 100%. That's been our experience, and the whole banking or the changeover from us. Once we made that change, Nick's department, but was just multiple departments and layers through the banks. So you have your relationship manager locally in Bendigo where we are, but then all of a sudden you introduce to multiple levels of products, and then there's a specialised banker involved with any one of those products. So, our experience overall has been absolutely fantastic.
Thanks, Michael. And you did mention early on that we weren't number one bank. I think I'd be remiss of me not to now ask a clarifying question around, are we now your number one banking partner?
Absolutely.
And that was a risk there, right? We hadn't practiced that question, so thank you for not embarrassing me. Thanks for your insight. So, Michael, you're not exporting now, so I'd like to invite Sonia from EFA to do a bit of a live workshop with you around the things that you should be thinking about when considering exporting. So Sonia, based on what you know about J.L. King, what are the things that Michael and his team should be thinking about and considering should they want to explore exporting into the future?
Thanks, Liz. Just by way of introduction, Export Finance Australia is the Australian Government's export credit agency. We are a commercial financier for the Australian Government, and we work really closely with CBA and others in the financial services ecosystem. We are a real complementer to the banking environment to really try to support Australian businesses and assist exporting businesses. So in that regard, from an export point of view, the definition of export is quite broad. When we look at exporting, it can be manufactured offshore, it can be a good or service, and it just needs to make its way back to Australia to be considered an export from Export Finance Australia's point of view. So in regards to that, also from a goods and services point of view, it can be part of the supply chain. You can be 2 to 3 rungs down on the supply chain to be deemed also an export from our point of view. So in relation to the question for Michael and what he should consider, I think when entering into, being a CFO, money and budgets and planning is part of my DNA. And I think the first thing I would say is when you're entering into a new market is to really be considering all the costs associated with it and what does that do to your cash flow. So some of those entry costs can be increased production costs, it can be marketing, it could be entering into new jurisdictions, there could be regulatory considerations you have to do. So all of those may have an impact on your cash flow, and thinking about how do you finance that and understanding that you may be in certain payment terms domestically that may not be how they are internationally. So I think, Michael, from your end, you would need to think about, does your domestic business and your offshore business look the same when it comes to exporting? So if you do have different payment terms, so for example, if you were to export to, let's just assume you were exporting to Costco, they would have fairly standardised payment terms that you would have to meet. That may have an impact on your cash flow. And so that consideration on your working capital and what it does to your working capital should be considered upfront to make sure that you are any gaps in that. You've got obviously your banker in CBA, and if they can't assist, then obviously Export Finance Australia may be able to assist, given you've got a contract with a Costco. The other thing is to consider the different buys, because if you're importing and using a smaller buy, for example, the payment terms may not be the same as what you're getting at, say, for example, a Costco. Considering what that looks like, doing your due diligence on the buyer, making sure that you have the appropriate, if your cash flow is lacking or you've got payment terms that don't necessarily work, making sure you've got your finance in place up front. Whilst you can go midstream and get that financing, it's better to have it up front, because obviously then any sort of gaps in your cash flow or working capital are already considered, and you've got your banker that can help you with that in that regard. The other thing I would think about is, so that's all your initial costs of setting up, entry into the market. Then you need to think about what are the ongoing costs that you have when you've established this export market. What does that look like from an exporter's point of view? These could be any ongoing costs that you have. Do you have the cash flow? These might be lumpy cash flows. Where do you need some of the finance? Where do you need your banker to come in and help you, or EFA to come and help you in certain circumstances? So I think there's some considerations you should think about. Payment terms, I think, are something that are really critical to think about when you're entering into some of those export markets.
Thanks, Sonia. Michael, that sounds like some really sound advice. How do you think about what you've heard?
Yeah, it's really interesting to hear about EFA, and up till today I never knew a lot about them, so it's been great sitting here and listening that we have the fact that we have this available to us in business. We've had some initial discussions with Austrade and some opportunities around export. Nothing yet to come to fruition, but hopefully one day something may come up and an opportunity arises, and it's great to know that these things are available to us.
Thanks again, Sonia, for that deep dive. I'm sure, no doubt, it's food for thought for everyone in the room. So Nick, given your experience in the industry and what you see in terms of customers and manufacturing customers in particular considering exporting, what are the challenges and considerations that you see?
Yeah, I think I think the banks have really changed, or certainly CommBank has over the last few years. The old age of have you got a property, let's lend against that. Look, it still exists, but there are better ways of managing cash flow. So the banks, we're in particular, we look at clients' receivables and inventory, and we can actually put value against that now, whereas 5 years ago, I'm a long-term banker, I've been doing this 36 years, and so it's really refreshing now to see the banks, particularly with the one I work for, which is even better, is actually focused on that and putting value against that sort of level for our clients. And I guess what product fits today may not be the product that fits tomorrow. So really from our perspective, it's sort of making sure that connection stays strong. So we don't apologise. We speak to our clients a lot. We do it for a reason, because we need to know what's changing in your business so that we can actually help you apply, a different solution in 12 months' time that may be completely different, or might be a product, funnily enough, that we've developed over the last 12 months specifically for yourselves, which is essentially what we've done with Stream, with the working capital facility, which is essentially a direct link to your accounting package through MyOb0, QuickBooks, or Intuit. So essentially the two systems talk to each other. So as you raise an invoice, you get direct access to the ledger real time. So which is a very cool new product that we've got. Not that I'm here to sell product, but it's paid, so we may as well sort of talk about it. But I guess holistically, sort of being with the customer on that journey, from a domestic perspective to international trade. The same specialists that work with me also do international trade finance, so letters of credit, cross-border guarantees, and we've got years of experience of sort of managing those risks, and our job's really to help sort of elevate that so you at least understand the risk involved and can make a better educated decision around how you want to manage that. And it may be product-led, may not be, so it's much more an advice-based sort of scenario. So yeah, there's things to think about.
Thanks, Nick. We do have a little bit of extra time, so I'm just going to go a little bit rogue, and I'll pick on Nick because he's in my team, so don't you worry, the rest of you are off the hook. Can you talk specifically around the case study where you've supported, obviously we've got Michael here today, but can you talk more broadly around manufacturing and some of the ways we've supported specifically with manufacturing customers?
Yeah, I'll leave you alone for a bit, Michael. You've been excellent, so you're off the hook. So yeah, look, there's multiple examples, but I'll use one of the sort of clients who importing steel, obviously, through COVID and sort of post-COVID, access to the actual commodity is pretty difficult. Freight rates went through the roof. We were seeing freight rates, in my life I've never seen before, from 800 FOB 40-foot FCL containers out of China, going up to $23,000 for a container in some aspects. So seeing clients have to bear that. Now, those costs, I guess, from a banking point of view, you want to know that you've got support from a bank that understands that their outside impacts that through no fault of your own. These are impacts that actually happen to your business. I know Liz talked about, we're not talking tariffs, but those sort of external factors that you can't control, the more the bank is sort of well-versed and understands what's happening in the market, the better that we can support. So where we saw costs of steel and freight go up, we were sort of proportionally increasing facilities, for customers, working really closely with them around their cash flow, looking at what's happening, what's changing. And some of that meant, in some cases, weekly conversations, but super important from our point of view to know what's happening in the business so that we can be better prepared to sort of give better advice and sort of structure facilities that work. And also, I guess, with those sorts of facilities, there are peaks and troughs. So there's certain times of year that things can get really hectic. So particularly debtors, everyone sort of goes on holidays in January. So, looking at extending terms over periods where it is going to be quiet and the collections aren't coming in. So having sort of more holistic knowledge of that supply chain and what it does to your business, making sure that we're sort of in sync with how it actually works for you, and make sure that the finance that we're providing works not only for today, but for the future going forward. So, yeah, so that's, hopefully it helps.
Thanks, Nick. Before we close, I do want to give each panelist the opportunity to talk a little bit more about their businesses, but sort of share some advice in particular. So, Michael, what's your advice for other businesses more broadly in manufacturing based on what you've learnt in your relationship with us and more broadly? What's the one thing you'd want to share?
I suppose today I'm not here being paid by the Commonwealth Bank, so I'm here to talk about my experience with the Commonwealth Bank, and I just probably want to talk about what Nick was just saying. We'd used products like the stream working capital with other banks prior to coming across to the Commonwealth Bank. I do want to say the product is as good as and it's seamless and easy to use. You don't get to the end of the month with big loads of work on reconciliations. So it has been a great product. But our whole experience with multiple products through the bank has been fantastic. So what I would say is, as long as you've got a good relationship manager, and that relationship manager is exposing you and showing you ways and giving you opportunities, and it's been a really good experience from our side. So I suppose don't be scared to take a risk. We see growth in our business and have done for 20 odd years now, where a 20% growth is a quiet year. 40 to 50% can happen. So when you're growing at those levels, it does pose its own challenges, especially around working capital.
I think you've probably got everyone's attention when you maybe it wasn't bragging, but sharing your growth between 20 and 40%. And so I think your one piece of advice is don't be scared, because it sounds like you guys weren't, and you've reaped the rewards of that, and you should be really proud to share that with everyone here today. So thank you.
No worries.
Nick, what about you? How can CBA help?
It's a good question. And he's not paid, so it is true. But yes, it's certainly we've sort of seen that post-COVID businesses really change the way they're operating. So if I'm talking sort of pre-COVID, win the business and then go and get the finance, we're seeing customers shift now to actually, let's get the finance first, let's get that bedded down, understand your cash flow, understand what's coming as best you can, because it's difficult, but have that mapped out. So having a good cash flow forecast and actually understand the drivers within that cash flow forecast. I think when you approach a bank and say, we want to do a cash flow deal because I don't want to put up security, the bank's going to ask for a cash flow forecast. It's just what we do. So digging into that cash flow and really understanding what are the drivers within that cash flow forecast and how we can potentially understand that better to give you much better advice. And don't be afraid to tell the bank when things aren't going great, because it happens. It's business. That's the real world. So the more upfront you are with us early, the better that we can actually jump on and see what we can do to support and help. So, yeah.
Thanks, Nick. We do have sort of circa 30 specialists based around the country that can really help you understand your cash flow needs and understand how we might be able to work with you. We definitely see it as a partnership, so I encourage you to come and see us at the booth afterwards. I know Nina and the team are there waiting to eagerly answer any of your questions, so please do that after. Thank you, Nick. Sonia, what about you? How can EFA help?
So I think with Export Finance Australia, manufacturing is our bread and butter. So we've been doing it for a long time. I think that when you talk about that definition, as I said earlier about export, it is really quite broad from an organisational point of view. It is not just a product that leaves Australia and goes offshore. It can be a service, it can be a good, it can be manufactured overseas and still make its way back to Australia. The income makes its way back to Australia, and that can be deemed an export. So I think from that point of view, it is quite broad. We are a complementer to the banking, to the banks. So we work really closely with CBA to try and work together to try and support customers, Australian businesses to grow. So very much a complementer. I think some of the advice is, as you're entering into some of these new export markets, is making sure that you're ready to operate in those environments. So understanding what the cash flow implications are, what do your payment terms look like, and making sure you're really ready and finance ready for that. And so not waiting for midstream, really having that conversation up front to make sure that you are finance ready. So whether that's with the bank, with CBA, or whether it's with Export Finance, if the banks aren't able to assist you, really ensuring that, because then you, from a cash flow perspective, you're not going to get those sort of shocks, and you'll have a little bit more smoothness across your business. I think that's really important because it is difficult operating in those. And then also EFA can help in that we can introduce you. We work in Australian government. Austrade does a lot of work to help with the entry into some of these markets. And so being able to introduce some of those, we can help with. We can also help when you may not necessarily be finance ready, but need some assistance on how to get finance ready. We can assist with as well. So I think the advice is, if you're looking to make that leap of faith, speak to between CBA and EFA, that we can help you to make that leap of faith if you want to do that, and feel really well supported in doing that.
Thank you. So I think the message is you're not alone. If you're considering exporting, you do have challenges with cash flow or want to understand your cash flow more, reach out. There's organisations like EFA that worked really closely with us and with you, and we all work in partnership to really help support Australian manufacturing businesses. So thank you all for taking the time for joining us today. We really appreciate it. And I want to thank AMTIL for inviting us to participate in the panel today. And of course, I want to thank our panellists, Michael, obviously in particular. Thank you. And I think you said 4 times that we didn't pay you. Noted. We didn't. And thank you, Sonia and Nick, for being here as well. So if we could please give the panellists a round of applause. As I mentioned before, CommBank does have a stand at MS472, which is complicated, and Amy and I found that challenge this morning. So it is over on the left-hand side near door 7 if you want to come and visit us, so please stop by. But thank you again. I hope you enjoyed our session, and I hope you enjoy the rest of Australian Manufacturing Week.
Please put your hands together for our panel. Cash flow is king. Make sure you don't end up the court, Jess.